Welcome, ladies and gentlemen, to Commodity TV and the new edition of our online interview series. We want to get an update to the quarterly numbers from Fortuna Mining, and Jorge Ganoza, the CEO, is here with us. Hey, good morning to you. I don't know, you're in Peru, or where are you?
Good morning. Good morning. Yes. Good morning for me, Joachim. I'm here in Lima, and thank you again for the opportunity to speak to you and your audience.
Yeah, absolutely. No, great company, fantastic. And I must say, your numbers, again, super impressive. I mean, it's not only because we have higher gold prices, silver prices, etc., but you guys deliver quarter by quarter steadily. And this is what I really like. And that's why I'm a shareholder of the company also. And of course, before we start, I want to say also for the BCAC here to do the disclaimer, this program is on behalf of and paid for Fortuna Mining, not that I forget that, because we want to comply fully with the rules, right? Yeah, the third quarter. Hey, that looks gigantic, I would say. You have a lot of cash, you make money, you make profits. Please comment a bit.
We had a strong quarter again, focusing on what matters the most, the ability of the business to generate free cash flow. We generated $73 million of free cash flow from operations. That's up from $55 million in the previous quarter, right? So we're capturing the full benefit of higher prices on the bottom line, no, on our ability to generate free cash flow. If we adjust our EBITDA for the impact of the rising share price and share-based compensation
Mhm.
and an FX loss, no, a foreign exchange loss in Argentina, or EBITDA margin on a consolidated basis was 58%,
Mhm.
up from 55% in the previous quarter,
Yeah,
right?
that's a lot, I would say.
So, 58% EBITDA margin, generating strong free cash flow, and building on a very strong balance sheet. Jochen, for us, coming out of the construction of the Seguela mine 2 years ago now, we focused on putting together a strong balance sheet, which
Mhm.
will enable the business to pursue its ambitions and also weather any challenges and changes. As you know, this industry is full of challenges. Anything that can go wrong will go wrong,
Yeah.
and a strong balance sheet is what uh, protects the business, right?
Yeah.
So we've been successful in that. If you look at our liquidity today, is close to $600 million. If we service all of our debt, we're still 266, $270 million net cash positive. We have about $480 million in cash.
Mhm.
We're companies in a super position, looking forward into the near future and onwards.
Yeah, and I think you have so much cash and cash equivalents and short-term investment that this is completely offsetting your debt. So you are net debt free, right?
Yeah, no. As I said, if we were to service all of our debt right now, which is not a lot, but if we were to service all of our debt, which is about $175 million only,
Mhm.
we're still cash positive $270 million
Exactly.
today,
Yeah. So
and
that's
growing
important.
and
Super.
growing.
Yeah. Yeah.
So for a company
Especially.
of our size, that's important,
Yeah.
and that helps de-risk our growth ambitions because we have a strong treasury, and also
Mhm.
safeguards us from any weather or storm that might come along the way, right?
Definitely. I think it's always good not to be pressurized by a lender or by a bank. I think it's always good when you can decide what you want to do. Um, Question. I saw the AIC are at 1,987 from your continued operations. Is there room here in the near-term future to bring that a little bit down?
Yes, our ambition is to have our ASIC more in the range of $1,500-$1,600 per
Mhm.
ounce. So if to look at and discuss our ASIC, let's first step back and look at the ASIC at our mines.
Mhm.
Okay,
Yep.
so if we look at Lindero, we had an ASIC of $1,570.
Mhm.
If we compare to Lindero a year ago, the ASIC a year ago at that mine was $1,840. So we gone in a year from 1,840 down to 1,570. No, and we
Mhm.
believe the mine will be stable at around that level, right?
Mhm.
So that is a good change,
Mhm.
and that's where we want to be. It's a low cost mine today. That mine today, as we speak,
Mhm.
is making a margin of almost $2,500 per ounce of gold produced. All
Mhm.
right. Now, if we go to our Seguela mine, Seguela in the quarter had an ASIC in the range of $1,700. Uh, but bear in mind that in the first quarter, the mine had an ASIC of 1,290. So at
Mhm.
Lindero, we have our ASIC coming down, and at Seguela, for the year, we have our ASIC going up.
Mhm.
So in various directions. Why? Because at Seguela, at Lindero, we're leaving behind a capital intensive phase and we're capturing cost efficiencies. And
Mhm.
at Seguela, we're going into a capital intensive phase, right?
Mhm.
So it's just the timing of capital. If
Yeah.
you look at our cash cost at Seguela, our cash cost is sub $700.
Wow, that's super. Yeah, that's
Right?
right.
So
Yeah.
what's taking us to the $1,700 mark is basically timing of capital expenses that we are deploying to unlock the ability of the mine to produce higher ounces next year, which we can talk about. And
Mhm.
also the impact of higher prices on royalties. We're all happy because gold is at $4,000 per ounce, but there is a flip side to that, of course. uh, we're paying higher royalties as well, about $80 per ounce of higher royalties due to higher prices.
Yeah.
So if you account for that, Seguela is operating at around, a sub $1,700
Mhm.
plus the timing of capex. So with these investments, we're unlocking the potential of the Seguela mine to produce about 170,000 ounces next year.
Mhm.
This year we're
Okay.
going to deliver about 150,000 ounces.
Mhm.
Next year 170. There's no free lunch. We need to invest some money, and that's the money we're investing right now, and that's why our ASIC looks a bit heavier in the second half of the year at that mine,
Yeah.
right?
But what is important for me is that your ASICs are not because of any trouble or problems. You are investing in your mines and in the business. So that is for the future.
Yes, yes. No, we're very calm. We first have to look at the ASIC at our mines, no?
Mhm.
And when we look at the consolidated ASIC at $1,900, for example, the rising share price,
Mhm.
following for your audience, we follow the guidelines of the World Gold Council to report all-in sustaining costs. And under those guidelines, we need to account in our all-in sustaining cost per ounce the impact of share appreciation, because a lot of our compensation is share-based. So when shares go up, share-based compensation goes up, and that also weighs on ASIC. No,
Mhm.
so between higher royalties, share-based compensations that are all driven by higher gold price,
Mhm.
all of that weighs into those $1,900 on a consolidated basis. But I
Mhm.
like first to look at it, as I said, at a mine level. At a mine level, our mines are performing and delivering where they should.
Mhm. Okay. Perfect. Um, What I saw also as a real highlight in that quarter was your PEA you delivered for the Diamba Sud Gold Project, because this is your next big driver in growth in production, but also brings the company again back to a multi-mine company, of course. And I must say I was quite impressed because, first of all, Senegal is very good to work in. But to be honest, an after-tax IRR of 72% with an NPV at 5% with $563 million, and you use $2,750 per ounce. I could imagine there's much more room upwards, right?
and to your point, uh, we're most excited about the remaining exploration potential and opportunities to bring more ounces
Mhm,
by the time we produce a definitive feasibility study next year.
mhm,
Internally, I have to say, Joachim, that we see a mine here, right?
mhm.
So we've concluded the PEA, which is, as you described, very robust.
Yeah.
I mean, and it will be undoubtedly the best use of funds we can
Mhm.
have deploying capital to build in that mine. 72% internal rate of return, using what today is a conservative gold price, uh, an NPV of what over $500 million.
Yeah,
If I plug in
550. Yeah.
$3,000 or I plug in, uh, $3,500 or whatever,
Mhm,
those numbers just go, off the charts, right?
mhm,
So
mhm,
it's the best use of funds. So we're advancing the project on multiple tracks, not sequential.
mhm,
So we continue doing exploration aggressively. We currently have 5 drill rigs on the property.
mhm,
Uh, we delivered the PEA. We're advancing with studies towards the definitive feasibility study, advancing engineering,
mhm,
and positioning ourselves to start placing early orders for key equipment packages to secure and de-risk the timeline of construction.
mhm,
We have filed our environmental impact assessment. On October 7th, we filed with the government our environmental and social impact assessment, and we expect we can get the certificate for that in the first half of next year. And that is
No,
one of the benefits, of strong benefits of working in West Africa, where the governments really are committed and working with us towards expedited permitting, right?
mhm,
So we
mhm,
have presented a very robust ESIA, and we're working with the government to have a swift approval next year, right?
mhm,
So, and at the same time, we have approved the early works budget. So we're initiating site activities. We're building a camp. We're doing some earthworks excavations, water control, sediment control, ancillary facilities. So we are advancing a lot of these activities in parallel. Why? Because we want to be in a strong position next year to publish the definitive feasibility study and concurrent with that, make the construction decision public.
mhm. Okay, super. So, what would you say, I know it's a little bit too early, but maybe can you give a little bit of an idea what the AIC might be then in that new production, given the fact that everything goes the planned way? What could you imagine? Would
At,
that be
at,
also?
at Diamba Sud, you mean?
Yes, the new
No,
one.
the $1,200 is what we have in the PA for
Mhm,
the all-in sustaining cost. It's a low-cost mine. In the initial years, it's a mine that will produce at an average of about 150,000 ounces per
mhm.
year. So it's meaningful production at low
Yeah.
cost, with very robust economics.
Mhm.
So undoubtedly, it's the best allocation of funds we'll be able to make. And yeah.
Yeah, absolutely. And I could imagine with your strong cash flows and cash in the bank that you probably can build a mine out of your funds, right? So you must not raise any money.
Absolutely. I mean, financially, the construction of Diamba Sud is de-risked. And I go back to my initial comments.
Mhm,
Putting together a strong balance sheet as a first priority, it's gonna render fruit to us because, we need to de-risk the project technically, uh, on the permitting side, but on the financial side, the project is de-risked. We don't
mhm,
need to go ask for a royalty with one of the royalty streamers or give an arm and a leg to a bank so they can help us fund or delay the project with the cumbersome process of project financing.
mhm,
No,
mhm.
it's a project
Yeah.
that we can find internally. Absolutely.
Mhm. When do you think, let's say again, hypothetically, everything goes the right way, you can really start the construction. When do you think first gold pour would be possible then?
2028 is our best estimate today.
Mhm.
Early 2028 is our best estimate.
Super. Yeah,
Right?
probably then the gold price is already at 6,000.
I'll tell you something, and I think this is an interesting topic for your audience.
Yeah.
We're all extremely happy because of the rise in gold and the future prospects. And we work for this, right? We work for times like this in the
Mm,
industry. And but a word of caution: what is the flip side of this high price environment for a producing company, for a mining company?
mhm,
Just imagine we're going to go into a construction, so we need to purchase equipment, specialized equipment.
mhm,
And question: do you believe that the production lines for the mills, crushers, and specialized equipment that we consume in the industry are designed to operate at maximum capacity? A
mhm.
reflection: the last time we saw, when was the last record gold price? And you
Well, the
know this.
last 2011, 2012.
No, I'll go. It's 1980.
This one, yeah, okay, cool. If we go 45 years back, then it's 1980.
No,
Yeah.
no, yeah, because the prices we saw in
Mhm.
in in 2010, 11, if you adjust them for inflation, were not higher than what we saw in 1980. In
Yeah, that's
1980,
right.
gold peaked at $800,
Mhm,
and then probably the average for the year was closer to 600.
mhm,
So if we adjust for inflation, $800,
mhm,
and bring it to $2025, that works to be about $3,100 per ounce.
mhm,
We're currently at $4,000 and probably going higher. So if you were a mining executive in the industry in 1980, and let's say you had a position of responsibility, so you had 10 years experience in 1980, today you're probably 75 or 80 years old,
mhm,
right?
mhm,
So those guys are retired right now. So generationally, we have never operated in an environment with this type of prices.
mhm. Yep, yep.
Reflect on that. So we're all excited about this high price environment, but what does that mean for the mine operating business, for the mine operating environment? We're only seeing the side of income,
Mhm,
but there is also the side of cost. And for example, we're going to go into a construction. A question I have is, everybody wants to build a mine these days.
mhm.
So, what's the delivery time for the SAG mill, for the carbon tanks, for the
Yeah,
leach tanks, for the crushers, for the belt conveyors, for the
takes all
truck?
longer.
Yeah, because everybody is putting pressure on the supply chain,
Yeah,
right? So,
absolutely.
so the price rise has been very, very quick. No, we were selling gold at $2,800 6 months ago,
Mhm,
and at $2,400 per ounce only a year ago.
mhm. That's
Today we're
crazy.
so I think there is a lag because the rise has been so sharp.
Mhm,
But if prices remain at these levels in the industry, we will start feeling the pressure of the structural bottlenecks that we have. And we
mhm,
need to be prepared to mitigate those risks. And that's a big, I believe, a topical issue that we're still all in the hysteria of $4,000 gold, but
mhm,
we need to start thinking forward on what does this means for the operating environment.
mhm, mhm. That's getting all tighter and longer and probably more expensive because
Yeah,
we
yeah,
know
yeah,
that
yeah.
there's
And,
higher
and
demand.
people, we need to try to keep the lead on our costs, keep our delivery times for projects short, and that's going to be a challenge. That's if prices remain at these levels, guarantee that's
Yeah,
going to be
yeah,
a challenge.
Yeah, that's right. Super. I have a question to Argentina, because we know Milei is in charge, and I think he's doing a fantastic job so far. He has brought down the inflation massively. And I saw that you have repatriated also US dollars from Argentina. So my question is, how is the environment these days? Is it yeah, much better, mining friendly anyhow, but also work wise, as you can bring out the dollars of the country? Is that all fine for you?
I can say that under the Milei administration, the business climate has improved dramatically in Argentina,
Mhm,
and we we have repatriated so far out of the country this year, this year alone, about $60 million. By
mhm,
the end of the year, we'll probably have repatriated close to 100 million.
So that's
So
important.
the business climate has improved dramatically.
Mhm.
I think
Super.
that we are optimistic, somewhat cautious,
Mhm.
because we know Argentina. We've been operating there for a decade now,
Yeah.
and we need to see some of the reforms or structural reforms that the country needs still to pass.
Mhm,
No, more
mhm,
important, a collective view that this is the path to continue on, right?
mhm,
And
mhm,
the validation of that is in the elections. So they just
mhm,
had an election. It was an important outcome.
mhm,
Uh, but they have, elections coming in another year and a half, 2 years. So we need to continue to see the buildup of all of this. So
mhm.
we're constructive, we're positive, somewhat cautious, but undoubtedly the business climate has improved dramatically so far.
Super. Perfect. Perfect. Okay, so that looks all fantastic, I would say. The quarter was great. The year will be good, I'm pretty sure. 2026, what do you have on your wish list? What is the most important thing for you you want to achieve?
I have two things.
Mhm,
One is, of course, what we discussed right now, which is the construction of our newest mine, Diamba Sud. We expect to be making that construction decision in the first half of next year, and that's
mhm,
an important milestone.
mhm,
And second, we have been enjoying a lot of exploration success at the Seguela mine,
mhm,
and a lot of that success is in press releases, in drill holes, but we have not been able yet, just because of a matter of timing, to put it in a way that the market can really recognize what does all of that explorations, drill holes with high numbers mean to the production of the mine. And
mhm,
I am very positive that in the coming weeks and a few months, we'll be able to start showing all of that exploration success. How does it convert into a mine that continues to show an exciting growth profile?
mhm,
Uh, we have now underground potential with higher grades, opportunities to extend the life of mine. And what I want to see, and I think it's within reach, is a mine that can show 10 years. That's a target, no?
mhm.
10 years of life of mine with productions in the range of 200,000 ounces per year.
Super.
So I believe, based on the success that we have had, that
Mhm,
that is within reach, and we'll be able to show it, put it in black and white in paper, and communicate it better. Because right now, just because of disclosures and the timing of things, the investors need to tie in exploration drill holes to a resource, and then to a mine plan, and then to what does that mean to production. So
mhm,
we just need to advance through the process and be able to present all of this in a way that it's easy for the market, the participants, analysts, investors to look at it and say, okay, this is a mine that can reach 200,000 ounces a year. It's a mine that can project the life of mine for a decade. This is
mhm,
a company that's advancing its new mine
mhm.
successfully into construction. So all of those things will come together next year, and that's very exciting to us.
Absolutely. I'm pretty sure that will lift the share price also. Super. Jorge, thank you very much for your time. That was a great update on the quarter and also on the future of the company. I think you guys are completely on the right track. And yeah, as you do always, just deliver and things will go the smooth way.
Good to talk to you and your audience. Have a good day, Joachim.
Thank you. You too, Jorge. Thank you very much. Yeah, ladies and gentlemen, that was Jorge Ganoza, the CEO of Fortuna Mining. And you heard it, the company is really in a fantastic shape. No net debt, cash rich, and they can finance. That is super important for me. They can finance the Diamba Sud out of their money, out of the cash flow, the newest mine. Then when the construction decision will be done in the first half next year, that's really fast. And that is for me fantastic because I must say, if you can do organic growth out of your cash flow and of the money you have, you are not dependent on anybody and you are the master of the speed and how you do it. So this is really something I like. No M&A adventures, which we saw in the past sometimes, which were, yeah, slightly successful. And the company is really doing fantastic things here. Happy shareholder, you really should consider this stock too. So Fortuna Mining is great. Thanks for watching us and bye-bye from Switzerland.